Good. Okay. So thanks for coming today. There's only a few of us. Let's just get our names. So my name is Emily, and it started with an L, right?
Yeah. I'm Linda.
Linda. Okay. Nice to meet you, Linda. And
Altagracia.
what is it? Altagracia.
Yeah.
Nice. And what's your name?
Hugh.
Nice to meet you guys. Thank you for spending your afternoon with us. It's awesome.
Oh.
So I work for MidFirst, which is the bank that's on campus right over there. You probably pass it a million times on your way to Subway sandwiches. But I have such an awesome job at the bank because my job is not to like open bank accounts or anything. Like my job is to educate people. And Quinn specifically asked me to come here today to talk about, how to open a bank account, how to manage it once you have it, how to save your money. Because, let's be real, like a lot of people have a bank account when they're younger, but then when they come to college, it's like big kid bank account. You know what I mean? Like, I remember I think I had maybe like $14 in my bank account when I was little, up until I graduated from high school. And then I was like, oh, okay, now I gotta like pay for stuff. And it was so much all at once. And I remember I felt really intimidated asking questions at the bank, because in my head, I was just thinking, well, I should know all this, and these bankers are like really smart, and they're gonna think I'm stupid, and I don't. And so that's just kind of the point today. Like, I don't want you to ever feel like you can't have a really good conversation with your banker who's sitting there. If you don't understand something, I want you to feel empowered to ask a question. So my goal is I'm going to try to give you just like some kind of categories of things to think about. Because I remember I opened my first bank account and they're like, well, do you have any questions for me? And like, they might have well asked me like, hey, do you speak Greek? Like, I wouldn't have known. I was like, I don't know the questions. But so like, I want to give you some questions to ask so that you are empowered with that information. All right, so I guess we should probably start with what is a bank? Because a lot of people are kind of confused about like how a bank works and how a bank makes money and how it all comes from. So the whole reason people go to banks is because it's insured. Like the whole banking system is based on trust, right? Because before banks, like people would just keep their money to themselves, right? Okay, you're just gonna ask me to do this every stinking time. So it's all based on trust. Like you would just keep your money in your house or whatever. Well, that really got cumbersome. So then we had to decide, all right, let's put it in this big central institution, and it's insured, meaning like that institution isn't going to just steal my money, because that's what everybody's concerned with. They're like, no, I want to keep it in my mattress, or I want to keep it in a jar or in a piggy bank. If it worked for this, there really wouldn't be a huge reason to put money in banks. Another reason people put money in banks is just it's convenient, Back before money and we just did the barter system, you had to like have some stuff. Like if you wanted your neighbor's tomatoes, well, you better have had some chickens to like offer for the tomatoes, Gosh, aren't you so glad we don't live in that world anymore? I would have had nothing. I would have been like, I don't know, I have no things. I have no skills, I have no anything, just...
I'd starve.
Yeah, I would starve. I would 100% starve. So it offers a safe place to keep money. It offers other services too, right? So like that's why people get loans. People get loans for cars, houses. MidFirst does not do student loans, but some banks do. Banks use deposits to make those loans, and then they earn a profit on the interest. So that's another thing. A lot of people don't really realize how a bank works, because like right now, banks are not paying a lot of interest, right? I don't think that's rocket science. A lot of people know that. And a lot of people don't really realize why. Well, so if you think about how a bank functions, let's say I gave everybody in this building $500, the coolest TRIO presentation ever, right? And they all went over across the street to MidFirst and put that money in savings, right? So like MidFirst has a ton of money now because everybody in this building put $500 over there. And let's say Linda wanted to go buy a car, and like she went into MidFirst and said, hey, you got a lot of money, could I just borrow like a little bit of it, just like a little tiny piece of it, and go buy a car? Okay, and we'd be like, gosh, Linda, that just sounds awesome, let me just check oh man, look at all you are a great financial genius, Linda. Here's $10,000, it's a loan to you, go buy a car. All right, but now here's the thing though, is that loan free to Linda? No, does she have to pay that back? Does she have to pay it back with extra? Yeah, that extra is called interest. Okay, so Linda's going to owe me that $10,000 back plus a little extra, all right? So turns out Linda is a model human being, and paid it back every month, right, until I have all her money plus the extra back. Well, so now I have more money than I started with, so what am I gonna do? I'm gonna keep some of that money, because I'm a business, and that's how I pay for my building and pay my employees and make a profit, and how businesses work. But then the rest of it, I'm going to give some of it to back to all the people in this building that had money at the bank. Because that's the only reason that I had money to lend out was because you guys deposited it here. So that's why if you have a bank account at a bank, a savings account, that's why you get a teeny little bit of interest. Now, the reason it's so tiny, well, one of the many reasons it's so tiny is Linda's car loan was really cheap. Linda's car loan, the interest she paid on her car loan was not a lot, okay? 20 years ago, loans were super expensive, really expensive, like compared to now. Like if Linda had a 2% interest rate on her car loan, it would have been like, I don't know, 5, 6, 7, 8%. Home interest rates, oh my gosh, they're like double, half of what they used to be. They were double before. So that's kind of a big jump, right? So when you start seeing savings account rates go up, you'll also know, poor Linda though, her car loan is going to get more expensive too. So the two kind of rise and fall together. Makes sense, right? Yeah. So, I don't want to just keep doing this all the way. Hang on. There we go. All right, so can you think of any other benefits of having a bank account? Like why having a bank account might make life a little bit easier?
Kind of helps you manage your money. So like if you have it like in person physically, then it'll tempt you more to go and spend it rather than you have it in the bank.
I can 100% tell you, if I had every dollar that I own in my possession at all times, like I would be broke. Because if I just had that in my hand all the time, right? So it helps you manage your money, it helps you segregate your money a little bit. Other things that it does, if you have $5 and you're going and buying, a sandwich, okay, that's one thing. But like if you have to pay your rent and it's, $1,000, you don't want to have, okay, well, hang on, landlord, I'm going to pay you this all in once, so just hold up, just here we go. Right, you want to have a debit card to do that, or a checkbook, or so you don't have to have all that. So it does make your life a little bit easier on a lot of different fronts. There are a couple different kinds of accounts, and how you use them is really, really important, okay? So the one that most people use every day is a checking account. And so we want to remember the thing about a checking account is this is where you put money that you want to spend. So this is where you put money you want to spend, you're going to pay your bills with it, you're going to buy your food with it, you're going to buy, whatever. There's lots of ways to spend that money. You can use checks, you can use a debit card, you could walk across the street to the teller and say, hey, teller, I would like $20 for my account, whatever you want to do. This is where you put money that you don't want to spend. And I see one of the biggest mistakes I see a lot of college students make is they get their first bank account and they only get this one. And then they have all of their money accessible by a debit card at all times, and they never, try to do anything. They never try to, segregate it in any way. So this is where you put money you don't want to spend. There's other things called CDs, like a certificate of deposit. That's like a super savings account. So that's not like normal. This is like, short-term savings, whatever. Let's say that you wanted to buy a car. I'm just trying to think of a hypothetical scenario. You want to buy a car after graduation. And so you've got like a down payment for it, but you want to save that down payment until you graduate. So you could go into the bank and say, here bank, here's $1,000, and I don't want to spend it for 4 years or 3 years or 2 years or like whatever term you agree on with the bank, some specific term. And then in exchange, the bank gives you more interest, a higher interest rate than they would have for these ones over here. And the reason, of course, is because the longer you promise to keep money in the bank, the more interest they're going to give you. So I remember I had no idea that this was even a thing, And I remember, I was this little penny pincher in college, and I was like saving my paychecks. And one day, I'm so glad a banker asked me this at the bank in college, because he was like, you have money just like sitting here that you're not spending. And I was like, I know. Like I thought I was like, yeah, I'm really trying not to spend it. And he's like, well, if you're really trying not to spend it and you're trying to save it till after graduation, like, why don't you have it in an account that's already more interest? And I was like, because I didn't know that was a thing. I don't know what to tell you, right? So these are some of the questions you need to ask when you open up your account. You know, what are you using this money for? Well, if it's to spend, it should be here. If it's a short-term savings, if it's long-term savings, you want to be maximizing your interest for that. And you should feel empowered to have those kinds of conversations with your banker. You're also going to like hear about different kinds of features. So you're going to hear about, you know, here's my debit card. If you have a MidFirst account, you'll have a separate card to think about because at MidFirst, because we're the bank of the university, you can get your ID card as part of your debit card. I don't know, do you guys have the MidFirst? You have, so you know what I'm talking about. Okay. Automatic transfers, this is how I pay my bills now, right? Because I got really sick of writing checks to things and I just have it automatically go. Online banking, the best invention ever, in my opinion. Direct deposit, maybe second best invention ever, because now I just, you know, I don't have to get that check in the mail from my work. Do you guys have on-campus jobs or anything? You both work? Do you work, Linda? No? Okay. Yeah, so just, you know, have your paycheck go right into your bank account instead of having to do that. So nice, it saves me so much time. But again, these are all things you can ask about when you're opening up an account. You also want to really be aware of the fees, though. So this is a big thing, and we see this a lot, where people are like, well, what's this fee? What's this fee? Dude, ask, you know, ask about it. Say, how do I avoid it? Some banks will have a monthly fee. Now, I'm just going to tell you right now, as a college student, like, I don't really care where you bank, but you shouldn't have a monthly fee. Because there are so many banks that offer you free accounts as a college student. Like, you shouldn't be paying a monthly fee as a college student. So just be aware of that. Some banks will charge you to take money out of an ATM. Or some banks, it's free to use their ATM, but like it costs money to use another bank's ATM. So again, these are all things you want to say, you know, when you're opening an account. Hey, so what's your ATM policy? Is it going to cost me money to do this? You probably want to know that, right? Before, like I remember when I did bank at MidFirst, I was over at Chase Field downtown, and I needed some cash because the ice cream at the Diamondbacks game only took cash at that time, and that was like a big problem for me because I love me some ice cream. And yeah, it was like $5 to take that money out. Like I could have got 2 ice creams. I was really upset. And that's kind of my currency. How much ice cream could I buy for X amount of money? Just say it. Checks, you know, that's one of those things, like one book of checks will probably last you like 6 lifetimes at this point because nobody really writes checks anymore. Stop payments, that's like what if you wrote a check to somebody and you need to like cancel that check and get it back, you know. Overdraft, that's another question. Hey, what if I accidentally spend more money than I have in my checking account? What happens? And if you don't understand the answer, ask again and say, gosh, could you try explaining that in a different way because I don't understand. That's something you really should know. And sometimes bankers are fast. Sometimes they're just like, oh yeah, you know, well, you're going to have overdraft protection and blah, 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 blah. And if you don't understand, you got to be like, hold up. So hypothetically, I'm going to Target and I overspent. So what's that look like, right? All right. Now, so that's how you mess up with a debit card, okay? You can also mess up with a credit card though, and it is my sincere hope that nobody in here ever does that. Now, I'm curious, do you guys you don't have a credit card, you have a credit card, you don't. Do you have a credit card? Okay. So a lot of people are like, oh, well, you know, that's a thing you get in college, right? What's that all about? Okay. Here's the deal with credit cards, right? Debit and credit, they look the same, but when you swipe a debit card, it's your money. Yeah, this is your money, okay? When you swipe a credit card, this is somebody else's money. And that could be really tempting and scary, okay? So when you swipe that debit card, you can't spend money that you don't have in your bank account. When you swipe a credit card, Visa's giving you a loan. You know, Visa's just giving you a loan and saying, pay me back later. You're gonna get a nice little love note from Visa at the end of the month. It's like, hey, so it's later now. Where's my money, right? And if you don't have, well, no, okay, time out. If you do have the money and you pay it on time, does anything bad happen? No, that's like the responsible way to use a credit card. I would hate for you to like go into your friend's wallet and find a credit card and be like, evil, evil, why do you have this, right? But, it kind of can be, like, because if you don't know what you're doing with it and you misuse it, it can be scary. So like, example, you're going on this spring break trip, $1,500, all right? You don't have the money for it, but you're like, credit card, whatever, figure it out later, not a problem. You come back from the trip, Visa's like, okay, $1,500, and you're like, yeah, I don't have that. Sorry, Visa. They're gonna be like, that's fine. How about you just pay us $30 a month? That's okay. And now though, here's the problem. Now this kicks in. Did you owe interest in the other scenario when you just paid it in full by the due date? No. But now you're on this like really spiffy payment plan, okay? And you're gonna owe this every month that you don't have this paid off, which means, you'll be paying $30 a month for 10 years. 10 years of your life. Like you won't even remember freshman year at ASU. You'll be like, what, I don't know, what was life like, right? You'll have paid over $2,000 in interest. Your total cost will have doubled. Do you think people like realize this is happening when they're just doing this every month? No. Ignorance is bliss, right? They're just like, I don't know, $30 a month, it was a really fun vacation, and that's all they, right? Now, the good news, because I mean, I really hope this isn't your situation at all. I mean, I hope you never have to put anything on a credit card that you can't pay off, right? But the good news is, even if you do, like let's say you mess up and you're trying to look for a way to dig out, this is just a minimum payment, okay? And you can pay more. In fact, oh my gosh, please pay more, right? So watch what happens. You have $30 versus $100. If you find $70 extra in your budget, look what happens to your payoff time. Isn't that just absolutely bananas? Like you knocked 8.5 years off your payoff. Look what you did to your interest that you paid total. And look what you did to your total cost. For $70 extra, you know? And, but why is this still a problem? Why do people choose this instead of this? Two reasons, right? One, they might not have the money.
And they're not aware.
Or two, they're not aware of it. So like one, they might only have $30. It might be a struggle to just get the 30, and then in which case you're like, gosh, man, maybe this whole situation up here wasn't really the best situation, okay? But some people are just like, yeah, Emily, I don't know who taught you math, but like 30 is less than 100, so I'm gonna do that. And you just want to shake those people. You're like, are you kidding? And they're like, da da da, because like you just try to talk to them, and they're like, da da da, I don't want to hear your math. 30 is less than 100. I'm like, okay, well, you know, I don't, these numbers don't lie, so I don't know what to tell you, right? A lot of people, because so sometimes people mix up like credit cards and debit cards and banks and not banks. So Visa is the credit card company, right? Now you can get credit cards at a bank. In fact, I don't know of any bank or credit union that won't give you a credit card, right? But you don't have to get it at a bank or credit union. Okay, so like you need to be at a bank or credit union to have a bank account, but you don't need to get your credit card through it. You can get them through a number of different places. Other thing to remember too, some credit cards, guys, have annual fees, which mean like you need to just pay $60 every year just to have the credit card in your wallet. If you're even thinking about remotely getting a credit card at some point, I would highly recommend not doing that. That's for people who like, you know, put a bunch of business expenses on their credit card, they want to get airline points, like whatever. You don't need all those frilly things. You know, it's not worth the extra money. Last thing I'm going to say about credit cards, there's also this kind of this misconception by the generation, maybe one or two older than you guys, that credit cards on college campuses are a problem. Now, it is a problem, let's be very clear. The average college student graduates with about $6,000 in credit card debt, and that is scary, and that's really, we're trying to lower that, okay? One of the ways we as a society are trying to lower that is, it used to be, 20 years ago, credit card companies would stand on college campuses and just hand out credit card applications, like nobody's business, right? Because here's a bunch of new people who need a bunch of stuff, have never had a credit card before, young and gullible, right? And they would just, here, do you have a credit card, right? Do you want a stuffed animal from trying to get for a credit card? Sounds great, okay? And a lot of people, a generation or two older than you, remember that vividly. And that's not the case anymore. So like you'll notice, for example, at the MidFirst, when we have a credit card promotion, we promote it at all of our banks, except the ones on the college campuses. Because you're not allowed to do that anymore. No credit card company is, no bank, no credit union is allowed to be like, hey, do you want a credit card today? And so, I mean, I think that's wonderful, right? Like, because we should, and there's a law now that says that, and I'm glad to see that we're doing something to combat that problem. I wish I could say it eliminated the problem, but it hasn't really, but we're just trying to, help make it better. So choosing a bank. Again, here's some questions, here's some kind of things to think about. A lot of people are like, well, I don't know, like, where do I go? Okay, a common question I get, can I have more than one bank? Yeah, in fact, a lot of people do. A lot of people do. I mean, I obviously bank at MidFirst because I work there, and I'd be crazy not to because it's like literally right there. But like my emergency savings account, I don't keep it where I work. I wanted to keep it as far away from my life as possible. I keep it in one of those online banks that doesn't have a brick and mortar store because I don't want it near me, So you can definitely have multiple different accounts. I know some college students like open one for themselves to use here, but then they still keep something at home at their home bank so their parents can transfer them. Like, just because you have a bank account somewhere else doesn't mean you can't have one or two or even three, as long as you're aware of all of it and are able to keep track of it. So I would recommend just kind of setting up a little chart, like, all right, here's the name of the bank, is it close to my house? What are its hours? Does it have an ATM near where? Maybe you use ATMs a lot, maybe you don't. I mean, these are all the kind of things you gotta think about. So, does it offer services I need? How do I feel when I walk in there? Did I ask a question and did I wait out a really long line? Did they kind of make me feel stupid? Did they sit and talk to me? And those are all really important things, especially the banks that are either on or right around the college campuses. They should be hiring people that are really good with college students because, hello, it's ASU, we're only the biggest college in, the United States, whatever, right? So they should be really good at handling college students and all of their questions. Once you choose an account, some things you gotta be asking to make yourself feel knowledgeable. How much money do I need to open the account? So that's called the opening deposit. Okay, how much do I need? Now, college student accounts are typically low. I know ours is $25. I think that's pretty standard for a lot of banks for college accounts. I know once you are on a non-college account, then it can be a little higher. It can be like $100 or $200. But we're all broke college students, so it's fine. What's the interest rate on the account? And again, this is where you got to think, all right, what am I doing with this money? Is it going to sit here? Am I going to spend it? Do I care about the interest? Whatever. Is there a monthly fee? If there is a monthly fee, how do I avoid that monthly fee? So some banks will tell you, oh gosh, you know what, there's a $5 monthly fee, but if you swipe your debit card 10 times and have a direct deposit, we waive that fee. You know what I mean? Every bank's a little bit different, so you want to ask that question. What's the ATM policy? What's the online banking? What happens if I bounce a check? All these things. I love hypothetical scenarios. And so when I sit there opening an account, I do all of those. So since you guys have MidFirst accounts, they probably told you this. So for example, our ATM policy, they say, okay, we recognize MidFirst is not, one of the huge banks, one of the big five in America, right? So you might not have a MidFirst ATM if you go, too far off of campus. So therefore, if you use another bank's ATM, they're going to charge you a fee, but then we reimburse that fee. So you'll kind of see it if you look on your statement, if you were buying ice cream, hypothetically, at the Chase Field over there, and using a Chase ATM, it might say, oh, $4, oh, look at that, MidFirst refunded that $4, so it doesn't actually end up costing you anything. You don't have to have a receipt or anything. It just happens automatically. So wherever you bank, you're going to want to ask, what is your ATM policy so I understand it? When you open the account, you guys did it, it wasn't hard, right? Most banks will have the same procedure. They're going to ask you to provide some information so they can verify that you're a real person. That sounds silly, but that's a problem. People opening fraudulent bank accounts and, because ID theft, and they're trying to, open up for these fake people. I've seen people try to open up bank accounts in their dog's name so that they can, it's pretty crazy. They're going to ask you to sign a signature card because that's a lot of how we keep track of, identity in people is, what they're matching up signatures. They're going to order you a spiffy little debit card, or in your case, you got the Pitchfork card, but wherever, most banks will let you choose, what design you want and whatever. They're going to give you some account documents, and then you have to make an opening deposit. So, you usually have a certain number of days or time to fund the account so that it's actually a bank account. And guys, this is the time. I know some people, the reasons I hear people say that they didn't ask questions, I didn't want to waste the banker's time. It's their job. They're literally getting paid money to answer your questions. That's their job. So ask away. You know what I mean? That's totally fine. Other things, I know that we love being paperless and everything. I would keep access to those documents that they give you so that you can always, understand, all right, what is the interest rate? What are the fees if I don't understand something? And you can even go through, oh gosh, okay, so could you show me the part about the ATM so I can highlight it and understand it and keep it for my records? I'm just always a fan of advocating for yourself and knowing exactly what you sign. I think it's really important. Now, once you have the bank account, you have to keep it healthy. Okay, and the way to keep it healthy, be really careful of overdrafts. So you want to know what your bank's policy is about overdrafts, but just because you know the policy doesn't mean that then you should go do it, right? So keeping track of what's in your bank account is super, super important so that you never try to spend money that you don't actually have. Regularly monitor your balance. If you've got mobile banking, I don't really see a reason why you shouldn't be checking in with your bank account every day. All right, let's see what we got. Okay, that's right. Oh, that check cleared. My paycheck came in. There it is. It's available. Oh, you know what? I wrote a check to somebody else, so they haven't cashed it yet, but I need to make sure that I keep it in there. Oh, wow, look, they double charged me for, at something. That happens sometimes. I've had it happen at the grocery store where, for whatever reason, the card went through 2 times, and so there were 2 transactions. I would never know that if I didn't look at my bank account every day. It's also you're looking for identity theft too if someone's stolen your information. That's often how they'll do it. So people don't steal a bank account or a debit card number and then go buy a giant TV. Well, some people do. But often what they'll do is they'll buy something small with it, see if you notice. Buy another small thing, see if you notice. Oh, this person doesn't check their account. Okay, hey, he doesn't check his account. Go. Yeah, no, we're good. Get all the TVs. Get them all, right? So you want to make sure you're regularly monitoring. So a way to regularly monitor too, it's called tracking your expenses. And I don't care how you do this, there are apps that will do this. The most popular apps that I see people use are the Mint app. It's a mint.com. It's not even really an app, it's like a full service program. You link your bank account to, it's not a MidFirst product, it's just it's like an everybody product. You can link your bank account to it and it shows you this pretty little pie chart of what all your spending is, and it's really kind of cool. The other one I've seen a lot of people use it's called You Need a Budget, YNAB. That one, I don't think it's free. I think there's like a limited free model and you can pay a little bit. I don't know, I don't personally use it, I hear people talk about it as being really good. So you can check that out. Or you can just use an Excel sheet or just monitor, however you do it, I don't care. But you just need some way of going, okay, this is what I spent every day. This is the money coming out. This is the money coming in. This is how many times I've gone out to eat fast food, right? This is how much I've earned this month by looking at your paycheck. All this kind of stuff. So many people don't do this. And it's really, really scary. Because so many people, you say, oh gosh, what's your housing cost at school? Oh, I don't know, my scholarship paid for it. And I'm like, but that's money, you should know, right? You should know how much. Well, how much do you spend on food a semester? I don't know, I eat when I'm hungry. Well, okay, but you gotta, these are important things to know. When you start tracking your expenses, not only do you make sure your bank account is healthy, but you also know if you're over or underspending in a certain area. I'll give you an example, right? So when I started doing this for the first time, I thought that when I tracked my expenses, I was going to have spent the most money on coffee. That's what I thought, because I was a Starbucksaholic, I admit this to you. I thought that's what my problem was going to be. But it turned out, I spent a lot of money on coffee, but it was right in line with what I kind of expected. The surprise expense was little fast food purchases. Because if you had asked me, do I go out to eat a lot? I'd be like, no, I take a lunch every day. So I don't know what the problem is. But then I realized, okay, I take a lunch, But then when I'm leaving ASU downtown, I'm like, oh, but you know what, I'm a little hungry. I'm just gonna stop and get a $1 cheeseburger, just like a little snack, like, or whatever. And all those like little snacks were a lot of money over the course of the month, and I had no idea. No idea. So it was like a surprise expense. So I really encourage you to do this. Tracking every dollar you spend for 30 days and start to look for your patterns and see if any of them surprise you, because they might surprise you. Basically, it's having a budget. Now, I hate to even use that word because people don't like it. People get all irritated when they hear the word budget. They're like, oh, it's like diet. People are telling me not to eat, telling me not to spend. Don't do this, don't do this. It is so easy, guys, really. There's only 3 steps to it. The first step, you put money in your savings account, okay? The second step, you pay your needs. And the third step, you pay your wants. And those of you that are working, I mean, you're probably well versed in this, right? You get your paycheck. All right, how much am I gonna save? And the percentage that you save might vary depending on your situation. I mean, when high school students ask me what percentage of their income they should save, I'm like, you need a pretty good reason to not be saving half or more of it. Because you are like an 11th grader. What are you even spending? You don't have any bills, you know? Like you don't have stuff, like why wouldn't you save a lot of it? But if you told a working adult to save half their income, well that's not realistic, because working adults have electric bills and phone bills and mortgages and rent and water bills. So you've got to kind of assess, where am I on that spectrum? Okay, working adults, I say, try to save 10% of your salary. That's a goal. That is your goal. Try to do that. So you've got to kind of figure out, where am I between 50 and 10% based on what expenses you personally have. I always tell people also, it's always easier to save less than save more. You know, so set yourself a high goal. And if you can't meet it, well, that's okay. It's always easier to save less, but try to push yourself to save more once you're kind of used to it. Like, that's really hard. So you do it by having a budget that kind of looks like this, okay? So all you have to do is have, this is the money that I have coming in, and this is the money that I have coming out, right? This is the money that's coming in. Maybe it's from a job, maybe it's from a scholarship, maybe it's from a grant, maybe mom and dad are still helping out, whatever, you know, this is the money that's coming in. Here's my expenses, here's tuition, here's my books, here's whatever, here's whatever. And the number one thing I hear people say, oh, well, I can't do a budget because every month is different. That's okay. The only way you start making patterns is by tracking each month. I guarantee you do a budget every month for a year, you're gonna look back at that and you're gonna be like, oh, so it turns out I spend a lot of money in August and September. And then like I don't, and then like December's a lot, and then January, February, March, April are pretty good, May's a lot, and then the summer is like more because I'm out of school. You're gonna start to see your patterns. And the only way to see those patterns is to keep track of it. But it's really, really cool to be able to look back, because like I have all my expenditures for the past like 5 years, like month by month, and it is fascinating. Because I'm like, oh, that's right, that was when we took that vacation, right? Or that's when I read some book about spending less money.